Hello, chart watchers, and welcome to Market Watchers Live with Erin Swenlin and usually Tom Boley. I am your host, Erin Swenlin. Today's show is being recorded, so you should be able to play back any or all of Market Watchers Live at your leisure. If you're unable to attend the show live, you can now go to www.stockcharts.com/webinars, follow the link to Market Watchers Live, and play back the show. Each show will be archived on our site until the next show begins. But if you'd like to review an older program, you can find those on our Facebook page or the Stock Charts YouTube channel. During today's show, feel free to submit ticker symbol requests, questions, and comments using the chat window next to the video player. Later in today's show, I will be providing myself with 10 stock symbols from your questions, and I'll use your requests in the 10 and 10 segment at 12:50 Eastern, where I'll attempt to annotate 10 stocks in 10 minutes. Market Watchers Live now airs on Monday through Friday from noon to 1:30. If you want to be part of the show, you can reach us via our chat room or via Twitter. Our Twitter handle is at MKT Watchers Live. As you leave the show today, we'd love to hear your feedback. In the lower right portion of your screen, you should see a How Do We Do section with a link to a one-question survey. Let us know what you think of Market Watchers Live and anything we can do to improve the show. For those of you joining us for the first time today, welcome to the show. We're glad you're with us. And for our regulars, welcome back. There we go. So let's get started. Tom is not here. I get to anchor the show today, but I was fortunate enough to get Mark Young from the Wall Street Sentiment Survey to join us. And how are you doing this morning, Mark?
Oh, well, good, Erin.
We're so glad to have you here. So we're going to learn a lot about sentiment. Mark has some very interesting things to share with us, and talking to him before the show, I even noticed that some of the information he's going to be presenting, I didn't even know. So we're glad to have you here, but I'm going to get started. I'm going to let you know our upcoming schedule, everyone. At this point, we won't be broadcasting Thursday or Friday, and Monday, Greg Schnell is going to co-host with me. And then next Wednesday, we will have Julius de Kempener from the RRG charting, and he's going to talk to us more about how to use RRG charting. I know you're not going to want to miss that. So with that, I'm going to start with today's agenda, but I do want to let everybody know who listens to us regularly that I know I don't sound the right way. Well, it just figures. Tom goes on vacation, and I immediately get the flu. So my voice is a little bit weak, but that's why we have Mark here. He's going to help me out. And so just bear with me. I appreciate it. So today's agenda, we're going to have market updates on the half hour, although I think I'm going to skip our 12:30 just because Mark's here and we want to talk at length with him. And then the 10 and 10 to 1, we'll do that at 12:50. And I'm going to start with PayPal. So if you want to take notes and look at that PayPal chart before I get to it, you can compare your notes with mine. And then we will be doing sentiment charts. So I'm going to show you, of course, we're going to be talking sentiment. Today is all about sentiment. So I'm going to show you some of the sentiment charts I normally show you with an emphasis today on the RIDEX ratio. So we'll be discussing that a little bit more at length. So you're not going to want to miss this show. Stick around. Mailbag and wrap up will finish the program, and then we'll all be off for a happy Thanksgiving. So with that, I'm going to go ahead and start with our first market update. All right. We'll start right here on our Candle Glance page that you can get to from the members dashboard. And what we can see is a kind of a boring day, in my opinion. You can see the S&P, although we're getting a decline here on the Dow. Most of the major markets are moving sideways, so I'm not seeing a whole lot of interest here. Treasury yields are down currently at 23.38. The dollar gapped down UUP and has continued lower, so not a surprise to see that gap up on GLD, on gold, and it is rising at this point. USO gapped up and is making another run after consolidating up in intraday highs. And we can see that the VIX is now sitting below 10 and currently reading at 958. The declines are leading advances at this point in time. Wanted to go here and show you very quickly the DP signals, because I did end up with a new PMO buy signal on the NASDAQ. That came right after we had just gotten the PMO sell signal. So if you want to read more about the NASDAQ's PMO sell and now following PMO buy signal, you'll want to go check out the DP blog where I wrote about that. Predefined alerts are going to give us our headlines today. And right now you can see the S&P 500 is crossed above that 2,600 level. Consumer staples not doing quite as well with the BPI crossing below 50. NASDAQ setting a new all-time high. Russell 2000, new all-time high. That's really interesting news that we've been getting, with the small caps really doing much better than we're seeing the large caps. And with that, I'm going to finish that first market update and get on with the show a little bit more. I did want to give you a little look at the S&P 500 daily chart, so I'm going to take you over to look at that. Okay. And I have Wall Street sentiment up right now. But we did have some new economic reports, and you can find these on Bloomberg. But I just wanted to go through a few of them with you. For mortgage applications, they rose about 5% seasonally adjusted. The market wasn't expecting that. We saw consumer sentiment come in by University of Michigan. It edged higher from mid-month to 98.5 versus the 98.1 the market was expecting. Jobless claims are near historic lows right now, down 13,000 to be 239,000 on jobless claims. For October, durable goods orders were down 1.2%, and the expectation by the market was that it would be up 0.04%. So a few interesting market reports, economic reports. And then I noticed down here, we're going to get the FOMC minutes reporting shortly after the show. So that will be interesting to see if that has any effect on the markets. And like I said, I want to take you to look at the S&P 500 that I have on, so you can get an idea of where we're sitting. I find it very interesting because we've been looking at, get down here. All right, so we've been looking at that rising trend channel on the S&P 500 and on the SPY, which is what I also follow. Here we go. So you can see we've been in this intermediate to long-term rising trend channel, and we drifted out of that. We did break down somewhat from that on the S&P 500. You could see more drift on some of the other indexes. And what I'm finding interesting is now that this rising bottoms trend line is starting to form overhead resistance. We're not seeing price get back up in there, but we'll have to keep an eye on this to see if it generates its own rising trend channel. And, you know, we could end up moving this over and starting a new one. But we did get those new all-time highs. You can see that in the thumbnail. And we're working on getting up to even more all-time highs. Currently, though, we're not reading at new all-time highs as far as the intraday is concerned. And look at the PMO right now. You know, we had it turn up, obviously, with the big rally that we had over the last 2 days, but that has been followed now by the PMO flattening. And, you know, we just got that PMO buy signal on the NASDAQ 100, and I'm going to show you that chart. And you'll see a big difference in the PMO on the NASDAQ versus the PMO on the S&P 500. Check this out on the NASDAQ 100. You know, we've been above the signal line, came down and got that sell signal, but immediately bounced off the signal line and continuing higher. So I find it really interesting that, you know, we had this really nice setup for the PMO on the NASDAQ, but for all of the other DP scoreboard indexes with the OEX, the PMO has been in decline. It's only now started to turn up, and we have quite a bit of our margin here. So I wouldn't expect to see those DP scoreboard PMO buy signals appear for the other three indexes anytime soon. And with that, I'm going to go ahead and introduce Mark once again. Interestingly, Mark has some ties to my father. He actually, you knew Carl quite a bit, didn't you, Mark? Before you knew me, I think.
Yeah, we've been corresponding since the days of AOL back in the 90s. In fact, your dad used to do the survey, the Wall Street Sentiment survey. It was then called the Fearless Forecaster survey, until he asked me to take over for him on that. But he ran that for years over on AOL.
Yeah, I know the AOL message board was the beginning of it all. And honestly, Mark, I didn't realize that Fearless Forecasters was originally thought up by my dad.
Yes, it was. I gather he found it to be one of his least favorite jobs to do. When he migrated over to the web, I asked him if it'd be okay if I took it over, and I did, and I brought it over to the web myself and created traderstalk.com and put the Fearless Forecasters over there and moderated all those difficult personalities. And we built a nice little trading community over there. It's actually kind of, it's still fairly vibrant, 20 years later.
So. Yeah, absolutely. All right. Well, I'm going to hand the screen back over to you if you want to just grab it and start telling some people about what it is you actually do, and maybe give us your take on how to read sentiment.
Okay. I'm happy to do so. Let's see, how do I take control of this here?
Oh, share. And then we'll get your slides right up there. I appreciate you coming in, by the way, to help co-host, and everybody. I appreciate your patience having to listen to my sicky voice. Are you having any luck over there?
I'm not having any luck here at all.
Oh.
But let's see. We're sharing the screen, and
yeah.
Okay, that will work.
And I should see you shortly.
Yeah. Let's take a look at I've got a couple of charts here that we'll talk about in more detail. But you use sentiment as a contrary indicator generally, right?
Yes, sentiment typically when I discuss it, I talk about it as being contrarian.
And that's the classic way of doing it. I do it that way as well. We run the Wall Street Sentiment Survey. That's not such a great contrarian indicator, but the AAII numbers can be. NAIM can be. We also can look at sentiment as a wall of worry that the market can rally from. As long as people are concerned about the market, chances are we think that the market can continue to rally. And that's absolutely, very solid. A very solid way of using sentiment. I also look for opportunities that are created by dramatic shifts, and you will see these dramatic shifts in the Wall Street Sentiment Survey that we put up on stock charts. We'll see it in AAII. We'll see it in NAIM as well. And frankly, the NAIM signals can be fantastic. We haven't had one in over a year now. Which is very odd too, but I guess that's a function of the bull market. But back many months ago, we would see a big shift, big bullish shift or big bearish shift in the NAIM exposure levels, and there would be a big move immediately on those big shifts. Similarly, I have an indicator that I use daily called the options oscillator, and I look at options sentiment a little bit differently, a little bit more like the ISDE folks, where I'm looking at options purchases to open. I try to avoid the market maker and firm activities, and I'm just really looking at the natural speculation in the puts and the calls. And then what I want to look for within that context is a big shift. So if, at this chart here of the options oscillator, you can see those lower bars there. That's showing you big shifts in call buying or put buying. When you see a whole bunch of call buying fast, that's usually a pretty good sell signal.
Mm-hmm.
And you can see every one of those signals over the past several months has been marked with an arrow. They're not perfect, but it tells you that when people are making a big shift, there may be more emotion involved, or they may be a little bit more exposed. And I think that's what creates the edge when we're trading, is that extra exposure where people might be inclined to make an uneconomic investment decision. They might be overexposed on margin and have to cover, or they might have simply more positions than they're comfortable with and have to do some hedging or change their positioning somehow or other to make things more comfortable for themselves. And as a result, you'll tend to get a contrary move.
Mm-hmm.
And that's kind of the classic notion. It's just sort of brought down onto a more micro basis. I found this to be particularly unique when you're looking at things that other folks aren't looking at. Again, like when I look at the ISEE data, they're actually looking at a much more nuanced view of the options sentiment than we might get if we were just looking at the CBOE put call ratio or one of those. I know you might look at the OEX put call ratio from time to time.
Mm-hmm.
Talking about that, I've always viewed that, not always. Since the last bear market, I viewed that as a rather reliable smart money indicator. When the put call ratios and the OEX are showing a lot of call buying, I don't want to be short. I want to be trading with those guys. And I've found that even their 10-day moving average can be very useful as far as giving us an intermediate term idea of what the smart money is doing. If the smart money is buying calls on a longer term basis, I think we want to be joining them if at all possible.
Right. Right.
And a lot of these sentiment tools aren't so much about picking a top or a bottom as helping you stay the course with your investment plan. If the trend is up, and you're feeling a little bit nervous, but you're seeing the smart money guys, in the OEX buying calls, we might want to be, finding a way to hold on to our positions well. Which, in fact, that's kind of what you and I have been doing. I think that since we're looking pretty good in Timer Digest right now, and
Yes.
we've been finding every excuse we can to stay on trend, right?
Right.
Right. Sometimes.
Yeah, let me mention that to everybody. I did tell everyone that I'd hit the top of the Timer Digest for Market Timer of the Year, but Mark is tied as well. So we're all sort of seeing how it's all going to come together, but I'm not sure how they do the tiebreaker, but we'll see. So
I'm thinking we might be doing rock, paper, scissors or something.
Right. That makes sense for Market Timer of the Year. So congratulations.
By the way, you were gracing the cover of Timer Digest last month too.
Yes, I know. I was so shocked, to be perfectly honest. Carl has not cracked the top of the Timer of the Year, so I know he's pretty happy to see my name near the top there. And yeah, I'm pretty shocked, but I'm not shocked in terms of looking at the market. We've been on this lovely bull market run. When you're holding on to a buy signal from right after Trump got elected, that signal is going to be pretty good. So
yeah, we're going to look fairly smart on that one, at least for a while. But it's that's probably a function of a number of things too, though. We're looking at a massive amount of liquidity pumped into the system. That kind of changes the way all the indicators work, and I think you've noticed that too.
Mm-hmm.
It makes people feel much more confident when when they see that there's sort of a floor on the market, when there's so much liquidity, and that's why a lot of the sell signals haven't worked for other people, and why you and I have both been just finding ways to strap in on the trend and stay with it, because there's no place to put your money. Once if you visualize having $1 billion to place, and you come out of the market because you're bearish, boy, that could be an ugly situation there. If you're sitting there on a bunch of cash, not making any money, losing money to inflation, and then having customers wondering, what you're up to, what are they paying you for? So of course, when the money comes out of the market, it's got to go right back in again as soon as possible, lest the guys running that money lose their jobs.
Right.
So it's an interesting situation. We diverge a little bit here, but anyway, this is why you're seeing. I've got the 10-day put call ratio up here. You can see that it's getting. It's a very. We're looking at the 10-day CBOE. Sorry about that. That's getting up there. That's showing a little bit of optimism. But at this time of year, that type of optimism isn't unwarranted. At least not in my view.
Right.
The smart money guys in the OEX are buying calls. You can see, if we can get this chart to load.
Absolutely. Be sure, Mark, people are saying they can't hear you completely, so just make sure you're talking right into that microphone in front of your computer.
Right.
I know it's so hard because I don't know if you guys realize, but a lot of times when we're doing this, we're talking with our hands. We're getting into what we're saying, and sometimes you just sort of move around.
I'm a gesture kind of guy. I don't know how I got Italian in my blood, but I must have someplace, because I'm speaking with my hands to a bunch of people who can't see me. So that's not helpful. But if you look here, I've got the OEX 10-day here, and that's you can see that's been on a pretty good decline here. Yeah. And one little tricks I've used is when I see that under 1.2, I know the market's in pretty good shape. There's not too much to worry about. It's not, it's obviously not a panacea, but it can be very helpful. And similarly, when you get up over 1.6, I pay a little attention, because that shows you some of these smart money guys are buying some puts.
Right.
Again, I'm not really excited about picking tops in here because of the context, which is another thing I want to discuss about sentiment. Context is everything when we're talking about sentiment. We want to always be on the right side of the major trend. Right now we're in a bull market. That's your primary context. If we're in a bear market, everything works differently. All the sentiment works differently. Your buy signals become sell signals. Your sell signals become buy signals. The short-term sell signals work out, whereas they failed often during a bull market. Mm-hmm. Similarly, I'll look at the shorter-term trend as well. That's a key, and then even the momentum is an important context for when we're looking at the various sentiment measures. You can get, if you've got some negative momentum, you can get a sell signal that will play out. It might not take you into a big, long swing decline in a bull market, but it might give you a couple-day decline, and that's, that can add a little bit of value to the portfolio, or at least keep you from maybe overexposing to longs, for what that's worth. But that context is always key. Whatever the time frame you're using, that's where you want to make sure you're taking the signals that are consistent with that time frame. Anyway, wanted to show you guys just a little bit more about some of the stuff we both use, but I use slightly differently. Last Friday, you were speaking about NAIM and how the mean average number had declined. And you can see here from this chart that they went from the NAIM number, which is their mean, went from 96% exposed to 49.76, basically just about 50% exposed.
Right.
That's if I pay attention to that.
Yeah, right.
That's bullish, but of interest. And I want to contextualize this too. We're in a bull market, so everything's different. But if you look at the median number, which is the fat center of all these advisors, the average of the middle of the road advisor over there went from only 100% long to 90% long. So he's the big fat middle group of advisors has basically stayed about as long as they always were. That number is one I like keeping eye on the most. But even so, we can see that the folks in the first quartile, more bearish quartile, went from being pretty bullish, at 94, all the way down to 64. That's a pretty big drop. The really bullish people haven't changed much at all. They went from whatever 110 to 100, and the most bullish went from 170% long to 200% long. That's what you would expect a bull to do. They can read a calendar. They know what time of year it is, and this is a pretty bullish time of year. They want to be they want to be long for it. But I look at that median number and the mean number both. They're both important. That mean number is shown the most aggressive bears getting more bearish, which is, we know that's that wall of worry that we need to see for a rally to continue. But similarly, we do have, if we were not in such a strong bull market, I would be viewing these median numbers of 90% to 100 as being somewhat problematic for the market. But it's certainly, and in fact, when I had, back in October, September, when 3/4 of the advisors were 94% or more long, I was getting a little bit nervous there. Not super nervous, but I was watching. I wanted to see. I was going to pay attention to my breadth. The cumulative breadth is very important in that type of context. And things like the Russell. If we were seeing signs of distribution, like the Russell underperforming the S&P, and the S&P or the Nasdaq underperforming the S&P, and maybe even the S&P underperforming the Dow. We see that sort of thing. Then you start getting a little bit nervous. They never got there, and of course we immediately saw that shift out of stocks by the most bearish folks, and that took a lot of pressure off. But I've got a chart there of the median NAAIM. That's you can see these guys have been bullish for a long, long time since last November. They used to be much more volatile in their exposure levels, which we discussed earlier. I track this every week. I will tell you that just as with the options oscillator, just as with the Wall Street Sentiment Survey, just as with the AAIM, or it's the AAII, when you see a big shift, it's telling you something. These guys are the NAIM folks are professional investors. It's the National Association of Active Investment Managers. They're not dumb money. As you can see, they come along for this entire rally. But just like everybody else, when they make big dramatic shifts, and I would say a shift of 20% or more, right in that fat middle there at the median, either long or short, you'll see a reaction in the market almost every time to that big shift, and that's typically an actionable trade. It might not be for long term; it might only be a 1 or 2 or 3 day signal, but that too is a very useful tool when we start getting more volatility, and we haven't seen as much volatility as we used to see in years past. But I used to get 7, 8, 10, 12 signals a year from this indicator. It was worth its weight in gold. Now it's more of just a sort of an indicator of the wall of worry, if you will. You look at the bears in that survey, and it's not giving us actionable signals. But I would encourage folks to kind of keep one eye on the NAIM numbers, just longer term, and always be mindful of those big, sharp shifts as you noted last Friday. I mean, that big drop down to 40 to 50% in the average number. That's a bullish sign. That may not be a one day immediate get rich signal, but it's telling you that somebody's all bared up, and the most aggressive bears have gotten a lot less bullish, a lot more bearish, and in an uptrend, I think that those folks are likely to be wrong and probably have to end up being a little bit more support for the market going forward.
Right. So with I know with NAME, one of the things like you were saying that we talk about is, it's about active investment managers. I mean, these are the guys. It is smarter money, but even so, if you do start to see that move, as you were saying, it's more of a quickly. Is that what you're saying? If it's a more quick move,
a more dramatic move. These guys are just like us. We all put our pants on one leg at a time. We can all get caught off balance. Believe me, the more you study sentiment, the more you're sensitive and respectful of other people's strengths and failings, and because we all have them. We all get overexposed or underexposed. The market will throw us a curve from time to time. And each person's style too comes into favor or out of favor as well. And when your style is out of favor, it forces you to make uncomfortable decisions in the stock market, and those can create uneconomic decisions. You can find yourself overexposed in a trend that's going the wrong way for you. Happens to everybody,
right?
So we have to, I'm happy to profit from that, but I don't do that with any Schadenfreude. Right. I'm not. I feel for everybody who's been in that situation. But we were talking about the smart money, and one of the things I do that I don't know if anybody else is doing is I want to find experts essentially in whatever sentiment sector I'm looking at, because obviously there's always somebody who knows more than you do about some segment of the market. And I know that the stock market is probably most sensitive to shocks to the financial system. And when I was thinking about that, I said, who knows about the financial system better than the guys who are lending money to the financial system? And in fact, the Fed keeps track of what the yields are in commercial paper.
Mm-hmm.
And they break it down for commercial paper for financial institutions and commercial paper for non-financial institutions. So I said, what if we just look at the differential between financial and non-financial commercial paper? And if we see a big differential, that should say to us that the folks who are lending money to the financial system, to the big banks, the money center banks, brokerage firms, the people who are lending money there are getting concerned. They're demanding a higher rate of return in order to lend them money than they would some businesses that aren't in the financial sector.
Mm-hmm.
So, and you can see this chart in front of us now shows the financial crisis in 08 and 09. You saw a big shift. They started demanding a lot more, a lot higher return. And it telegraphed that big shift you see in 08, 09. That's part of the panic. But earlier in 07, as we were topping, that number got up over 0.4, and it stayed there. It might chop back down, but it was in an uptrend. It was staying high, and when that happens, that's a warning sign. And you saw a little bit of a warning sign here. I've got a chart here from going back to May of 2016. With the Brexit situation, we saw a little spike, but we barely got over 0.4, and only for 2 days. So they were worried, but they weren't that worried. Mm-hmm. And you can see since that, we've been drifting lower and lower with almost no differential. In fact, some days we've had a negative differential, meaning that there is no premium whatsoever being demanded, for lending to the financial institutions. In fact, I view that as a short-term buy. If you see that go negative, things are looking awfully good for the financial system. All things considered, if I've got an excuse to go long, I think I'm going to go long for that, or at least a day trade there.
Mm-hmm.
You're seeing, since 2016, you're seeing more and more and more instances of us being below zero, being a negative premium being commanded for financial lending. That to me says the financial system's sound. I mean, folks may be worried about inflation. They may be worried about some currency issue, but those in the know, those who get paid the most to know what type of risks they're taking when they lend money, they're saying we're not worried. We're not worried at all. And the Fed also provides a really deep database here. So I just pulled up a little chart here showing the relationship between the financial paper and the S&P. The red is the S&P. The blue is the differential between financial and non-financial commercial paper. And it's not a perfect chart, but it kind of gives you an idea here. When you see those shots down, the market looks pretty good. And this is an older chart; it's not current, but this has been one of the tools I've been using to keep me from getting shaken out of my longs. When I see nobody commanding any premium, any significant premium, I know I'm not going to get blindsided by a big money center bank going belly up, or a brokerage firm being overexposed to some financial instrument or another.
Mm-hmm.
Maybe this will change. This will probably change. I don't think that the cryptocurrencies are being reflected in this. I don't know if that's going to cause a shock to the market at some point in time. But the important thing is that we don't want to be blindsided by something that isn't showing up in the stock market immediately, or by a problem being worse than we thought it was. This is a good tool for making sure that there isn't something ugly going on beneath the surface in the financial system that we're not aware of, and that the correction that we're in isn't isn't just a correction. It's actually the beginning of something steeper and deeper and uglier. So I view this as sort of just one of those special safety measures that I want to take, and I look at this every single night, just to make sure something isn't sneaking into the system. And I tell you, looking at it for the past year or so, or at least 7 or 8 months, I've been sleeping very soundly after I check it every night, because I know I'm on the right side of things. That's been really helpful. There's one other little tidbit I've got here that I wanted to share, and that's our short-term sentiment polls that we run over on traders-talk.com. This is really valuable for short-term trading. Sometimes, just like everybody else, our traders, can get leaning too hard, and yes, they can be a fade. But what I find incredibly interesting and valuable is that over all the years I've been running this poll, and we're going back to 2001, I believe, when I first started running these polls. This crew is uncanny about being heavily short at market tops and heavily long at market bottoms. And I'm not talking about every single little wiggle in the market, but worthwhile trades, including major tops and major bottoms, but also just a little multi-week swing. And that, while that's information is interesting and useful, what I've done is I've kind of turned it on its head and said, okay, we know that if the market's making a top, the fearless forecasters are going to be heavily short at that top. We know this because almost every single time they are. I mean, maybe 4 times they haven't been since 2001. So if I'm looking for a top and these guys aren't short, I don't want to be looking for a top anymore. It's just that simple. The perfect example of this was on the 9th of the month of November here. We made that last high. And that morning, I looked at the data and I'm like, there were hardly any people short. And when we pulled back hard on the following a day or so later, 2 days later, I knew that's a buy. It was highly probable that we were going to rally because the high was not in. I knew it with near certainty, not 100% certainty. These guys, sometimes don't get it right. The market finds a way to make us all wrong from time to time.
Yeah.
But I knew with fairly high probability that we were going to see new highs. So on this dip, I knew I wanted to take every one of my buy signals because it wasn't likely to morph into anything more serious than a little minor correction. And if you look here, you see all those long wicks. Those are places to be doing some buying. That's a great opportunity for a day trader. And similarly, a swing trader. If you had something that got you, long 5 days ago on that nice reversal day there, now you're looking pretty smart here going into Thanksgiving. But lo and behold, you see us yesterday making new highs. That was foretold with a high degree of confidence by that lack of bearishness, lack of shorting at the prior high back there on the 9th or 10th, whenever that high was made.
Mm-hmm.
That's useful information. It's very rare that you get to say, I know with near certainty something's going to happen in the market. I mean, almost never happens, at least in my experience. I spent most of my career saying, if this, then that, and maybe this and maybe that. I almost never get to say, batten down the hatches and buy the dips.
Right.
It's and there's almost no chance of a serious decline getting going. That's something that's a rarity that we get to have that, and that's why I thought it'd be worthwhile pointing this out. Folks should feel free to come by traders-talk.com too, and participate in the poll. That's to register and use the site. But there's a lot of smart people over there, a lot of experienced traders, a lot of professionals, and you can participate in the poll. You can just look at the poll. It's free. It isn't going to cost you anything except for a few minutes to log in and look at how the voting's going. But the key is, and I'll just tell you the secret here. I know the secret to just your listeners.
Right.
But if you see 40% of the pollees short and the market's making new highs, you can at least look for a high. But if they're not at least 40% short, you don't want to be bothering, picking a top. You want to be looking to buy every day in that context. Similarly, at a low, you want to see 40% of those guys long. And if they aren't long, it's probably not a low. Now, lows are a lot easier, to pick, at least for me, because there's so many other sentiment measures that show uneconomic activity in the market. People panicking, people getting margin calls. That shows up all over the place, in the options data and the VIX. And bottom spotters are never really a problem for somebody who looks at sentiment. But top picking is tough for anybody. And it's nice having a tool that says, don't even bother,
Right.
Especially for folks who are inclined to do a little top picking, which I think many market timers, people like you and I, might have a small tendency to want to do, even though we know better. We still want to do it.
Exactly.
I'm pretty good at it, but all I know is I've never been paid very much for being good at it.
Well, we had a lot of people asking, how do you get to, you were showing that like a safety measure chart. I mean, do you have, I'm not sure what you're using that is available on stock charts and what is pretty much yours.
Right, sure. Yeah. Well, when I'm looking at Wall Street sentiment, that's on star charts. AAII is on star charts. And those, again, those are great tools to use when you're looking for those shifts. So that's available. The fully long, fully short is proprietary. If folks want to see that on a daily basis from me, the charting, they have to take a trial. I'd be happy to let anyone who signs up for a 2-week trial. I'll give you, anybody who's listening to the show, I'll give you 3 weeks to look at it because we got, in fact, I'll give you 4 weeks to look at it since we've got a holiday in here. Trading's going to be a little bit slow anyhow. But you just go to wallstreetsentiment.com. You can see where to pick up a trial request. I'll put you on my list, next day, and give you a month to look at these charts real time. Or if you want to look at the raw data yourself, just go to traders-talk.com. At the head of the Phillips Forecaster message board, I have the survey pinned. I run the poll every night and then close it every morning. So you've got current data, current read on sentiment. And by the way, it's very mercurial. This crew trades, so they'll be all pulled up one day and all bared up the next, and without much to do, without much major happening in the market. They're very dynamic, and they're looking at a lot of different tools. The options oscillator is not available on stock charts. That again is mine. NAAIM is available on stock charts, and it's great. That's useful there. I might talk to Chip about maybe doing something with the options oscillator. We just haven't had time to maybe get that together. I wouldn't mind providing it to users of stock charts. As I do the Wall Street
good luck
Centers.
trying to get new indicators on stock charts.
Yeah.
Yeah, we always, Tom and I always joke around whenever we get Chip around to, so when are we going to have, a PMO histogram, or when are we going to have seasonality? And but
I tell you, it's an awfully robust service. I've loved stock charts since the first time I used it.
Yeah, it's I'm really, obviously I grew up using Decision Point and working for them, but that was powered, near the end by stock charts. So it was fun switching over once Decision Point merged with stock charts and I really started to learn how to use their charting, and I'm pretty amazed at what all is available. Even if you're just a basic member, it's pretty cool.
Absolutely. It's robust. There's so much there. People can use it so many different ways. I imagine you could devise your own indicators and have a heck of a system. And the depth of being able to go back and see how it behaved in past bear markets, that's hugely valuable. We used to spend thousands of hours coming up with indicators that way. And having to test them manually in a spreadsheet.
Right, exactly. So
your dad did a lot of great stuff with that originally. That was one of the huge values of Decision Point. Is all that historic data he had.
Exactly.
To come up with great trading techniques and tools. I still use the ITBM as a fundamental part of all my market timing. I picked that up from Carl a long time ago.
Yeah, we're not going to get into too long ago, how long ago it truly was. But no, this is I really appreciate it. I'm going to get ready to do the 10 and 10. But folks, if you have any questions for Mark, go ahead and post them in the chat box, and I will see what we can get to after I finish the 10 and 10. So normally Tom tells me symbols, and then normally I give Tom the symbols and he talks about them. So today it'll be a little different, in that I'm going to be giving myself the symbols. So let's go ahead and I'm going to get started. I'm going to give myself a little bit of, 5 seconds. All right, now I'm going to start we always joke we never get it in 10. So I told you we would start with PayPal, and I will bring that up for you. In fact, actually, I want to move over. Hang on. Give myself some time here. All right. So PayPal. So I'm going to be giving you guys my the decision point look. Tom and I trade differently. We look at charts differently. If you've watched the show at all, you know that our analysis does differ to some degree. So I'm going to be giving you my thoughts on these charts, and it would be interesting to see what Tom would have said, but you can certainly let me know what you think. So the idea is that I'm going to annotate these charts very quickly and then show you how you can save them into your own chart list. So I'm looking at PayPal right now. So the first thing, as we usually do, is I look for the support resistance areas. Right now, that seems like the best area of support. I like when I look in the thumbnail here, we have price sitting above the 5-day EMA. The PMO is turned back up. I don't like the fact that it seems to just be hesitating here. And notice that this PMO top is higher than this one or this one. And that, to me, is a negative divergence. But then at the same time, when you look at OBV and, of course, the scooter, it's been, among its peers, one of the best performers. So, we had this 0.89 drop, but I'm going to actually annotate some trend lines in here. I don't usually get to do this, so it's kind of fun, I have to say. All right, so see, you've got a rising trend in place here. So I would imagine that we're going to continue to see that. I would only be a little bit concerned for the fact that the PMO is rather overbought and does seem to be hesitating here as far as momentum goes. But that's likely due to this consolidation area here. So I'm going to save this. And this is going to go directly into our Market Watchers live chart list that you can get to. I post the links in the Market Watchers live recap. So that was our first one. I'm just going to jump around. I was able to look a little bit in the chat box to find different ones to look at. So I'm just going to go kind of down the list of what it was already there. So if yours doesn't get picked, forgive us, just come back, request them via email or request them through Twitter, and we will hopefully get to them at one point or another. So let's go ahead and we're going to annotate. And we're looking at oil and gas, which has been an interesting space. All righty. Look at that, really very clear resistance that turned in is now support. I like the fact that we're now we got the intermediate term trend model buy signal here when the 20-day EMA crossed above the 50. We didn't get a whole lot of action out of that, but then, once price got down here and, broke down below that 50-day EMA, it started to take back off. So I like the fact that it's sitting on the support area. You've got some short-term overhead resistance arriving. The PMO doesn't look particularly great right now because we are seeing, we had a negative crossover, but I can see right now, just looking at the readings, that the PMO is right back above its signal line. So we're still technically on a buy signal. There aren't any negative divergences going on here. So at this point, I would be a little bit concerned about the fact that the PMO is overbought. But one of the things with my trading style that I don't think always comes through is I use the PMO to find those momentum trades at the beginning. Once I have the trade, I'm more of an intermediate term trader. I do not trade like Tom, like every day. I think most of you have picked up on that. So I use the PMO to get me in that attention flag, to get me over to that chart, to look at it like I do for Monday setups. But a lot of times you look at those charts and they don't look that great. So I don't pay attention to me, even if you're seeing a rising PMO. If I'm not seeing price action that kind of matches that, look at this PMO buy signal that came in here, and it just, nothing really happened with price at all. So once I'm in, I get the PMO to show me to look at the chart, and it gets me in. Once I'm in, because I am more of an intermediate term trend, an intermediate term holder of stocks, I don't necessarily use the PMO as my trigger to get out. I use it as it's an attention flag, a warning sign. So price still looks pretty good right now on this. So even though the PMO has had this whipsaw sell signal, is now back on a buy, and we are looking at overbought readings, I'm not using that as far as dumping the stock. If I immediately start seeing the PMO turn down, or however that works, I might reevaluate if I'm seeing it overbought and you get a sell signal like we got here, which would have saved us a little bit of decline right there. So I just wanted to give you an idea of when I'm looking at these, I look at the PMO secondary if I'm already holding the stock. I use the PMO mainly to get me that attention flag, to get a look at the chart. So that's so at this point we do have an overbought PMO, but if I were holding this, I don't believe I wouldn't let go of it just because the PMO is kind of dipped down, because it's still above zero, which is strong, and it hasn't dropped out of the sky, and price action is still looking pretty good. So I hope that clears that up a little bit for everybody. But I know we talk about Tom's trading style all the time because that's, he is that short-term trader. All right. Feel free to pop in at any time, Mark, if you have a comment or a question. So, all right.
Absolutely. I'm just looking at the comments in the chat window there.
Excellent. Well, hopefully you're going to be able to answer some questions there too.
I'll be approving registrations at traders-talk.com as soon as we get off of this this chat.
Awesome. No, that'll be
if anyone wants to register there, I apologize for them not being able to see the real-time survey, but soon we'll be able to do that.
Awesome. All right. Everybody can hear my California accent here. Okay, so let's go ahead. I'm going to annotate this again. That support resistance line is invaluable. All right, here we go. Look at that flag formation. That was really interesting. And rather than a flag on that flagpole, you can see, let's get the trend line here. You can see it was more of a pennant than anything else. So you could also make a case if you were just looking in the shorter term at this. Look at, you could see, hang on here, I got to get my, but I also see that this was, this could have been also a ascending triangle or descending triangle. Those are bearish patterns and you're supposed to expect a breakdown. And sure enough, we got that. So of course the question would be, wow, we had a flag and we got the breakdown. Well, you had that shorter term descending triangle. So we got the breakdown from that. But now it looks like we're making a move, and what maybe is more of an extended flag has now executed, and we're getting that breakout. Like this, I'm going to also mark this area right here as support, because I think that's the next important area of support. If we do get a pullback, I don't think I'd be racing to be in here, because I think we've already gotten a lot of this move. I would look for a pullback before I would get in. When I'm looking at the PMO, I like the fact that it came down, avoided a sell signal, is continuing higher. As I said, I'd be a little concerned because it is overbought. But once I'm in, I'm using the PMO as a temperature gauge, but not necessarily a trigger, if that makes sense. So at this point, the PMO is still strong, and we got that beautiful gap up rally, executed a flag, and we could be forming another flag right now. So liking the look of AXTA. All right, that's 3 in 8 minutes, so I can tell already we're not going to be on time with it. But we'll manage through. Everybody loves this segment. I hope you enjoy it as much with me doing it too. Let's see, Oxy was one. And again, I think I've seen this one already. All right, annotate. Support resistance line, there we go. Interesting, right? You've got that area that was resistance and is now acting as support. Came down and tested that. Looks really nice. I would, if I was getting ready to look at something to get into, I wouldn't be looking at this, mainly because there is that PMO sell signal. The PMO is putting some margin between it and the signal line. Again, if you're already holding it, I'd be a little bit concerned here as well, because I see that as the first, that could be, well, it's a rounded top for one thing, but we could be getting ready to build another top. And of course, that would be a reversal pattern, a double top reversal. So again, I always talk patterns before they have completely formed. They're not official, they're not confirmed until they actually execute. So I'm just giving you my opinion as far as what I see starting to get together. And notice also when you look in the thumbnail, you've got what could be considered also an island. And that's usually, you would expect to see that gap close when the island started. So that would probably also give you that double top. What I might do would be to wait for it to unwind, get back down to this area of support, let the PMO unwind. You've still got a nice strong scooter. So time to wait on this one. Look for that pullback because I think we could get that. And I'm going to mark the PMO. I'm going to mark the fact the scooter is getting better, but I'm also going to mark the possible double top and possible island reversal. Let's put that around here. There we go. All right. So that is number, well, I think, let's see. It's a lot easier when when you don't have to do both. I don't know how Tom did that before. Okay, so that one I did, that one I did. Okay, and that one I just did. All right, so J&J, I think I'm just gonna, Johnson & Johnson. Okay. Occidental Petroleum. Looks like we have a lot of oil and gas coming in today. So we just did Oxy, J&J. Let's get that up there. Johnson & Johnson. There we go. Kind of a declining trend there. But getting ready to hit some important support. So actually, it's right about on it. And what I'd want to do is see how it reacts to this area of support. I'm going to see a breakdown here. I'm looking at PMO. It's on a sell signal, starting to reach what I would say near-term oversold territory. So it's lining up nicely. OBV volume, don't like to see that trickling lower, but price action is going lower, so it's going with price. Scooter, again, I don't like to see that on the decline. I keep forgetting I need to actually annotate here. Don't like that. Again, don't like that the PMO is here, but at the same time, I think it's important to note that the PMO is starting to hit that area where it could be considered oversold. Good place for a turnaround, and we're getting this move back to this area of support. It looks like a really strong area of support. I would like to see, again, the PMO start to turn up at this point, but it is getting into a really nice area. Hopefully that was helpful. Okay. And here we are. So again, you'll be able to find these in that list. Let's see. So we've gotten 1, 2, 3, 4, 5. All right. 5 more. Next one is one of my old favorites, Amberella. Amba. This one I got in on that parabolic because of the PMO. It came up in my PMO scan, and Amberella did, and rode that parabolic back then, but I haven't been back in it since. All right, so let's annotate this and look at what's going on. And there's some pretty obvious areas of support and resistance here. I selected this one because, again, you want the most touches. Here we go. You can even consider that it's a little outside the box, but that's telling me that's a good area of overhead resistance. And of course, it matches right up with our short-term top right there as well. So it's a good way to figure out your support resistance. And I'm looking at it here, and this is one of the reasons I'm going to move a little on a tangent. Greg Morris always talks about, regular trend lines not being quite as useful as horizontal support and resistance, because people remember where they bought a stock and where it sold, even if they're not looking at a chart necessarily as a technician, they still remember. That's memory. And so what you really do want to see are these the support resistance lines. You need to find those because they really are what give you your ideas for stops, for limits, and that sort of thing. So all that being said, we're now looking at Amberella hitting this overhead resistance I would want to see it break out above that. But I think we're already seeing some good stuff here from the PMO. It's just in that overbought territory. The scooter is not all that impressive here with it declining. OBV, I don't mind so much. But this could be a concern right here, is that overbought PMO. But it has turned up and bottomed, so it may very well have showed up on one of my scans, I imagine. But I'd like to see either a pullback to that 20 and then a move up above, or just right now, if we got that move right above, breakout move, that would be great. I think you could make a case for taking that move all the way up to that 65 level. So, but right now, this is an important and strong area of overhead resistance, and I think it needs to be taken out. All right, that was number 6. All righty. I know I should be numbering them to a way that I know which number I'm on. Okay, Caterpillar, I think that was the next one. I always recognize these symbols, guys. It seems like we request sort of the same ones. I do try and mix it up when I feed them to Tom. So if you get a little annoyed, sometimes it's just because we've looked at that symbol like 2 times already in the week. And so I don't generally pull it out. But real interesting area of consolidation here. After that gap, I think the gap is interesting. So I'm going to actually mark it as well. But I'm going to do a fill, and I'm going to pick a light color. There we go. To adjust your colors to get it more or less opaque, that's where you would do that. And I have my regulars at the bottom here. Okay, so we had that gap, and it's now making a really nice, it's a nice consolidation area. And look, I think it's good news that, even though we got that gap up and we've only been moving sideways, look what it did for the PMO. We got the sell signal, but it's managing to unwind with only sideways action. It didn't really require a complete move down. And so to me, that's showing some strength, internal strength. And look at the OBV here. Let's start annotating. Rising nicely. There we go. Scooter is sitting in the hot zone, as I call it. And here we go. Move that. So we've got that island, and the expectation, of course, I'm sorry, we have the gap. The expectation would be closure of that gap. But I think it's what we're seeing here. These are breakaway or continuation gaps. And I think that's what we're seeing, another continuation gap. So I would be waiting, honestly, for the next one up. I would wait for that PMO to get a little bit more oversold, or at least lower, and start to make that turn. But other than that, I think it looks great. I'd love to see it hit that 20, and then that's where I'd want to get in, and then hopefully ride a gap move up, or another move up for Caterpillar to set up a new trading range. All right. 1, 2, 2. Renaming the segment 10 and 20. Well, when Erin does the 10 and 10, I'm not as adept, and as people can tell, and here I am dealing with the flu. So I just wanted to be here for all of you, though. I love this show.
Well, they're a tough crowd, I'll tell you.
Yeah. Right? They're usually pretty good, and I just, it's so much fun to be here. Everybody makes comments, oh, we can tell with your energy and all of that. And it is true. We really do. We really love what we do. So even though my voice is terrible, I know you guys are putting up with it, and I really appreciate it. All right, next one, Citibank. Citigroup, I guess that's true. Nice. Okay, I kind of like this chart, just looking at it right off the bat here. And here's some reasons why. Got that nice support level. Look at the PMO, though. This is what excites me. This is what would have brought this chart to the table for me. It hasn't brought it just yet, because you can see it's been more flat rather than on a rise. But as soon as it would start to rise by 1 or 2 days, this chart would land from my scan on my desk. So right now we're making that move. I know I would be a little bit concerned because we are getting ready to hit these areas of overhead resistance, but that PMO in oversold territory turning up like that um, definitely makes me interested here. I think that, we've gotten that move. It's pretty much straight up here as far as a real short term trade. Might want to have a little bit more of a pullback, but to these near term tops right here. But I like that PMO. I would be watching this for sure. It would be on my watch list because of the configuration. And that's, again, I use the PMO to come up with my watch lists, to come up with my possible investments. The scan that is in the Market Watchers recap, it's at the bottom of all of those recaps blogs. You can get to my scan. It's really rather simple, but then you saw Chip Anderson's yesterday. He presented it, and though they're simple, they're very strong, useful. All right, so that makes 7 and 8. 2 more. Let's see, SQ, I think was square. Oh, that looks like a parabolic to me, which means I wouldn't be touching it at this point. Of course, if I were in it, I would definitely be holding it with a trailing stop. And I think I've discussed trailing stops with everybody. I don't typically use trailing stops. I usually use a hard stop if I use one. Most of the time it's mental, but for the fact that I trade a little bit more on the intermediate term, I do like to set hard stops. I just don't do it all the time. Okay, so I wanted to show you this parabolic here. So we're going to start here. And all you do when you're really looking for these is just keep drawing rising bottoms trend lines. And here we go. I'm going to start from this one right here. And that's the next spot. And then I'm going to start from the next one from here. And there we go. So you can see it's sort of this curvy parabolic move. And you've got a PMO now that is sitting in highly overbought territory. Volume's going with this move. Obviously, lots of interest here. And that's a positive. But my main issue with this is just it is in that parabolic move. I don't jump in on the parabolics. If you'd got in down here, great. But as soon as we're starting to make these straight up moves like this, I get nervous. With a parabolic, what you have to watch out for, and I've written about them before, is that when they do break down, they do so very, very quickly. And you can get really, so many people will get caught holding the bag. And even a hard stop might not help you, because if it goes down that quickly and there are that many orders at a certain level, you could still get burned. So I like the trailing stop on parabolics, keeps moving it up there. Doesn't generally hit those. I'm trying to think. It's like when I bid on eBay, I always go a couple of cents one way or the other, above or below the bid, or in this case, as far as my stop. I don't go for the obvious spot. I like to try and take it a couple pennies different, just so that it gives me that opportunity not to get caught. And Amberella.
The parabolics is that they oftentimes retrace the entire move, which is really painful. That's the only problem with them. Otherwise, they're a lot of fun, right?
Absolutely. When you get on them, oh my gosh! When I rode Amberella back, I mean, it's one of the best investments I ever made. And honestly, I find that when you get in these, a lot of times it's dumb luck. But I don't consider it dumb luck because I found it with the PMO scan. Hey, it came to my attention. I found that investment. It did way better than I expected it to, and there was a lot of hype going on around it. So that would explain. All right, so number 9, and now we'll finish and we'll wrap it up. I do want to show and talk about the Ridex ratio and get your opinion on that. I know you're familiar with it.
Mm-hmm. Okay. Yes, I am.
Uh-huh. All right. And HMX, okay, I must have written that one wrong, or maybe, let's do LB, I think was one I saw recent. Okay. Back here. There we are. Much limited brands, L brands. And let me get this annotation tool. And again, auto support resistance is pretty much very important. There we go. I'm going to put that. Notice that lines up on that gap support too. That gap resistance or support. I think that, again, you'll find when you start using these support resistance lines, that's typically going to be the case. It does line up. And again, Greg Morris talks about it. Okay, so I don't like this PMO. If I were holding this stock, I would continue to hold it, mainly because I know that there's more room up here for it to get to before it hits that overhead resistance. I wouldn't be personally getting in this because of the configuration of the PMO. Again, I use the PMO to help me get in, not necessarily get out. So I would be watching, if I were holding it, the fact that I do have an overbought PMO and it has topped. I'd be paying close attention, probably setting my stop. I can see right here we have a little bit of a gap. Might get my stop going in there right around that 20-day EMA if I really wanted to tighten things up. But honestly, I think, with this PMO, it is topping right now, but it's tried to do it previously. I am worried a little bit about this OBV. Oop, I don't want that. I want to draw, because we are seeing the volume in a negative divergence here with price, and you certainly don't want to see that. So we're getting a lot of information here that there's some weakness coming in. And so if you're holding it, I would want to hold it and maybe tighten up that stop based on what I'm seeing here. Maybe set my limit if I get to this area of overhead resistance, be done with it until it gets back down and unwinds. So those would be my comments on L brands.
The declining volume over the past few days on that little mini flag, if you want to call it that, or mini pennant, I guess.
Yes.
That's at least a little bit bullish there.
Yeah.
I think you have the right idea. It's not an exciting chart. I wouldn't be buying it, but if I held it, I think I'd have a little bit of faith for a shot towards that 54 level anyway, maybe 55.
Yeah, absolutely. Okay. Well, that completes the 10 and, oh my goodness, way over, even 10 and 20. I hope you all enjoyed that. I know, again, I like the opportunity to do this because you don't always get to know much about how I trade and my trading style. And I think that a lot of people think that I trade short term like Tom does, and I really don't. I think I'm more like a lot of the average investors in our chat room. So hopefully that will work out. And so let me finish. I was going to talk about the Ridex ratio. And here we go. Am I on? Okay, I'm in Chrome. What I would suggest to you, and I will put the link to it, but if you just type this in the search box, documentation, and there you go, Decision Point Ridex Asset Analysis. And the one thing we really like about this is, Mark, you've been using these surveys. I know AAII is a survey, but what you want to see is the money where the mouth is, and that's kind of what we talk about with the Ridex ratio. You may
say actual positioning is key, and that's why the Ridex ratio is so valuable, and that's why NAIM is valuable too. Same concept, real money, right?
Exactly. So the idea is we've taken the Ridex. They have funds. It used to be just run by Ridex, but they're now part of Guggenheim, and they have a group of funds that are equity or bull funds. They track the assets in the money markets as well as the assets that are in the bear funds, and then that's how we come up with our asset ratio. So I'm going to take you to the most recent chart, and that will require me to switch over. I'm sorry, I'm so sniffly. I'm going to get my rest, and I will be all ready on Monday with Greg. I appreciate, again, all of your patience here. All right, so I wanted to show you my RIDEX ratio chart. So I'm going to go to my sentiment indicators. I'm running a little slow, it looks like. Okay, so the RIDEX asset. And again, I talk about this a lot of times with my with the crowd. I hope everybody can see this okay. All right, so here's what we're tracking. The total assets in the RIDEX bear index funds, the money markets, those are the people in cash on the sideline. And then we have the bull and sector assets and funds. And so we track those to see where the assets are going. Are they coming out of bear funds? Are they moving to cash? And that sort of thing. And at this point, with this chart, the best way to really identify what's going on is in the thumbnail. And yes, I've been bugging Tom to get the thumbnail on his charts. And he said, as soon as you start using candlesticks on yours. So I guess I have to think about switching. But anyway, what I noticed right off the bat here is the fact that, the bear funds are starting to see an increase in that. And that, of course, is showing us some pessimism. For a while there, though, we were losing the money out of money markets and out of the bull funds. This was a real interesting area that I think I talked about 2 weeks ago. When I see people pulling cash out, moving cash out of the bull funds and now moving quickly into the bear funds, that gives you a sign that, hey, something's going on here. People are getting more nervous as far as their money. They're putting them in these hedge funds, a lot of them. So I find that very interesting. But that's what we watch for, is see where all of the money is going. And then, of course, the ratio, the smaller the ratio is, you can remember back from math, of course, bears versus the bulls. The larger the assets in the bulls versus the money market in bear, the smaller this number is going to get, and smaller and smaller. And you can see that the ratio overall has been rising. So there's still definitely well, we're in the middle of a very strong bull market. And I think that explains the fact that those assets keep going into those bull and sector funds. So, did you have any comments? I really appreciate you being here today, Mark. I hope you've enjoyed yourself.
It's been fascinating and fun. I wish I was more familiar with the sound technology. If we do this again, I'll make sure I've got a better mic going and make sure folks can actually understand me. But I did look at the RIDEX data, and I agreed 100%, which is why you didn't hear much comment. Those shifts that you see, that you pointed out, are key. When you see a solid shift out of the money market, or out of the bull funds and into the bear funds, that's exactly the type of thing I'm looking for. Every time I want to buy in that. And obviously that was the call to make, right? If you went long, you were looking pretty darn good today on that shift.
I'm just going to draw this in. We can see you can see the arrows on the thumbnail, but when you go to save it, you can't see them on the thumbnail. So I want to point these out. This is what was that area that was very interesting. We were seeing. So this is where I was talking about the fact, the increase in the bears, but you're seeing a pullback in cash and in the equities, and that tells you something. So right now, I would be looking at this spike in the assets for the bull and sector funds. I think that's pretty interesting, and we're starting to hit highs we haven't seen in 2017. We're already, the last highs we've been setting are already higher than we saw in 2017, and now we're getting ready to make some new highs in 2017. So
this is a bullish time of the year, though, and you see a lot of times there'll be a squirt into those bullish assets at the end of the year, November, December. Not always. Didn't happen in 2012, but in 13, 14, 15, and 16, right. Assets flowing into the bull funds, for the end of the year round.
Exactly, that Santa Claus coming to town. I know you and I are counting on that for the end of the year to get that market timer of the year with our buy signals in place. Hopefully, the market will continue to do as it has been. And I don't know about you, but I certainly think it will. I would certainly do for that pullback, but just really just haven't seen that.
I thought for sure we'd get, the Bears usually get their Thanksgiving and the Bulls get their Christmas. And, the Bears are running out of time here.
Yeah, exactly. Exactly. So I'm going to just take a quick peek here at the Dow chart before we go. All right. So I just wanted to point out, as far as the Dow goes, I'd been looking at what could have been a possible reversal, head and shoulders forming there, but clearly that busted with the rally we've seen the last 2 days. The fact that we bounced off that 20-day EMA, I'm really happy about that. And we'll have to see with the holiday week. Certainly, you can't take volume into consideration. It starts to get lower anyway, just like the volume of people who come watch the show, etc. during the holidays. That's what happens. We actually do have lives other than this. Generally. But again, I really appreciated you coming by. I did want to, like I said, I wanted to give everybody a quick peek there at what's going on with the Dow. And I think I'm going to do one more look at our candle glance before we hit the road here. And again, it was great to talk to you. So you're setting up some trials for everybody on the site, or?
Yeah, I'm going to give anybody who signs up for a trial to wallstreetsentiment.com. Be under wallstreetsentiment.com/trials. You sign up for a trial instead of the regular 2 weeks. I'll give you all a month, just so you've got the time to look at it, because the holidays things get a little slower, people get busy. Take your time, get to know the service. There's a lot of good things to get out of it. Also, if you've registered over traders-talk.com because you want to see the poll data on a real-time basis, don't worry, I will approve those requests as soon as we get off here, actually. And I'll be checking in regularly, approving membership requests. And we do that just to make sure the quality of the data is good. You won't get spammed by us. We don't do that. If you register, you'll probably hear from me twice. Once when you register and once to confirm it. And that'll be about it. But once you register, you can come in and check the polls out every morning. The data will be there. I'll close the poll at 9:15 or 9:15 every morning. As you can see, those neat little data bits, the sell signals, buy signals, and the don't pick a top signals. I think those are pretty useful there. And again, it's real time. It's free. I'm happy to share it with you all.
Excellent. I did see a question in here really quickly about how to get the thumbnail. The Zoom thumbnail is a checkbox right here underneath on your screen. And then somebody also asked about how to get those trend lines even. And it's simply a matter of you select the line, and then while it is selected, I know that if you push a command button, I think it might be the control button on a PC, hold that down, click on it again, and then drag it. And now you're going to have exactly the same slope. So let's show you that.
It works the same way in Excel.
There you are.
Control, copy it.
Perfect. We were talking about the fact that I'm all Mac. I don't do PC anymore. I used to do that all the time. So we were doing some stuff this morning. All right, so we're getting ready to close down, and I just want to thank you again, Mark, for being here. And
it's my pleasure.
Upcoming schedule. Remember that we will not have a program over the next 2 days, so you don't need to come in for that. Market Watchers Live airs Monday through Friday from noon to 1:30 Eastern, and you can join us. And if you can't make it live, we would certainly love to have you come along and check out our archives, which you'll find on our Facebook page and on our YouTube channel for stock charts. Again, Greg Schnell will be with me on Monday to co-host, and next Wednesday we should have Julius on the program to talk about RRG charting. With that, I'd ask you to complete that survey. How'd we do? Please be forgiving of my voice. I hope to be much better on Monday and without fever. So that'll help a little bit with my quick thinking. And happy Thanksgiving to everybody. And we will talk to you. I will certainly talk to you again on Monday at noon Eastern.